Okay, if you've been anywhere near the financial news lately, you literally can't miss the headlines. Gold, that ancient shiny metal, is doing something, well, something pretty shocking. It's smashing records and leaving investors all over the world asking one simple question: what in the world is going on? Let's get into it.
So what's the number that's got everyone talking? Brace yourself. As of November 2025, gold is trading around $4,040 an ounce. I mean, that's a number that just a couple of years back would have sounded like science fiction.
And look, while this didn't happen overnight, the speed of this climb is just wow. For years, gold was kind of plodding along, from about 1770 in 2020 to just 1800 in 2022. It started getting interesting in 2024, but 2025, it's gone completely vertical. That's not a rally, my friends. That is a straight-up rocket ship.
Just to wrap your head around this, a surge of over 50% this year alone. That's one of the biggest moves for gold we've seen since the 1970s. We're talking dozens, 48 new record highs in 2025. This isn't just another bull market. This is a historic, headline-grabbing event. And that right there is the million-dollar question. Or, I guess, the $4,000 question. Is there something real, something fundamental happening in the world to justify this? Or are we all just watching a giant, dangerous bubble get bigger and bigger, waiting for that inevitable pop?
So to figure this out, you gotta understand this massive tug-of-war that's ripping the market in two. Think of it like two heavyweight champs in the ring. You've got the bulls in one corner, the bears in the other. And here's the crazy part. Both sides have a knockout argument.
So here's how it breaks down. The bulls are saying, nope, this isn't a bubble, this is a whole new world. But then you have the bears, and they're pointing at the charts saying, are you kidding me? This is a textbook bubble. The price is completely disconnected from reality. Let's dig into the bull case first. Let's hear them out.
All right, let's step into the bull's corner for a minute. For them, this isn't about hype or speculation. It's about massive, global shifts that are fundamentally changing the game for gold, making it more valuable than maybe ever before.
Their whole argument really boils down to three huge pillars holding up this $4,000 price tag. First, you've got a brand new heavyweight buyer in the market. Second, let's face it, the world's a risky place right now. And third, the simple math of our financial system makes gold look really, really good. Let's tackle that first one, the new buyers.
The scale of this it's just mind-boggling. We're talking about central banks buying a record-breaking 1,200 tons of gold this year. They're now gobbling up almost a quarter of all the gold that's mined. And you gotta understand, this isn't some short-term gamble for them. This is a major strategic move by entire countries to get less dependent on the US dollar.
And then, well, just turn on the news. You got conflicts, you got trade wars. Global uncertainty is basically the new normal. And in that kind of world, gold plays a very special role. It's not just an investment, it's the ultimate insurance policy. It's what you want to own when you're worried about everything else falling apart.
Okay, but that's just one side of the story. Let's switch gears and walk over to the other side of the ring. For every bull making that case, there's a serious expert looking at the numbers and sounding the alarm. They're saying, plain and simple, this is a bubble.
So how do they know? Well, one of the classic red flags is the gold to silver ratio. Think of it like a historical yardstick. For decades, 1 ounce of gold was worth about 57 ounces of silver. That was the norm. Right now, it shot up to nearly 85. That's a huge sign that gold's price has just sprinted way ahead of everything else. And it's not just some obscure metric. You've got some of the sharpest minds in finance raising these red flags. Professor Oswald Damaranan at NYU, this guy's a legend in valuation. He's not mincing words. He's basically said, look at the history, gold is clearly overpriced.
And you can see this playing out on the ground, in the real world. Take India. It's the second biggest gold market on the planet. And right now, everyday people are saying, whoa, that price is too high. They're putting off buying gold for weddings. They're choosing smaller pieces of jewelry. When their most loyal customers start to walk away, that is a huge warning sign.
So here we are, right in the middle of this investor's dilemma. You've got these huge, powerful forces, the fundamentals, pushing gold up. And at the exact same time, you have all the classic valuation signs screaming that it's gone way too far, way too fast. So what are you supposed to do?
You know, what's really interesting here is that the experts aren't shouting, sell everything,
or buy more? The consensus is, well, it's more subtle. It's a message of caution. The thinking is, hey, the reasons to own gold are still there. All that global risk isn't just vanishing overnight. But chasing the price when it's at an all-time high, that's just playing with fire.
So, if you try to be smart about this, the experts are pointing to a 3-step playbook. First, if you already have gold in your portfolio, just hold it. It's your insurance policy. Let it do its job. Second, if you want to buy more, be patient. Don't chase the rally. Wait for the price to dip a bit, maybe 5 or 10%. And third, and this is crucial, keep things in perspective. Don't go all in. A 5 to 10% allocation is plenty.
And that really leaves us with this one big final thought. We're in this crazy moment, caught between the fear of a bubble and the reality of a new world. The ultimate question for gold isn't just about what it's worth today, but what its role is going to be. Is it just a shiny relic from the past? Or is it becoming the essential refuge for a very, very uncertain future?